Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be breaking down the latest action in the markets for you today. We've got a lot to cover with geopolitical tensions, oil price shocks, and some intriguing moves in the major indexes. So grab a coffee and let's dive into what's shaping the financial landscape for us long-term investors, while also keeping an eye on short-term trends. First up, the big story dominating headlines is the ongoing conflict in the Middle East, specifically with Iran. Tensions have escalated since strikes began in late February, and there's no clear resolution in sight. This has driven oil prices through the roof, with jet fuel costs doubling and crude oil surging over 60% since the start of the year. Experts, including JP Morgan's CEO Jamie Dimon, are warning that this could keep inflation sticky and push interest rates higher than expected. For us long-term folks, this is a reminder to watch energy exposure in our portfolios, as volatility here could ripple through to consumer spending and corporate margins. Let's check in on the major indexes to see how they're holding up amidst this uncertainty. It was a mixed day on Wall Street, with a timid rally after the Easter weekend. The S&P 500 and NASDAQ both posted gains, up a modest percentage, showing some resilience despite the geopolitical noise. The Dow Jones also nudged higher, reflecting cautious optimism among traders. However, the first quarter was rough, with the S&P 500 marking its worst performance in a few years, down over 4%. As long-term investors, these dips can be buying opportunities, but we've got to stay mindful of the broader risks. Zooming in on the S&P 500, we saw a nice rebound last week after 5 straight weeks of declines. Analysts are pointing to hopes of a diplomatic solution in the Middle East as a potential driver, though skepticism remains with key deadlines looming. Some are even calling this a major bottom, suggesting a compelling entry point for those of us with a long horizon. Keep an eye on upcoming inflation data and Fed signals this week. They could sway sentiment fast. Over on the NASDAQ, tech-heavy names are showing some strength today with a solid uptick. Despite a tough year so far, down over 8% from its peak, there's a flicker of hope with a recent rally. The question for us long-term investors is whether this is a sustainable recovery or just a short-term bounce. Software stocks, in particular, have had a brutal stretch, but there are whispers of themes that could reignite interest, something to monitor closely. Now, let's talk winners. Among the large caps, we've got some standout performers. Intel and Advanced Micro Devices led the charge with impressive gains, signaling strength in the semiconductor space. Corning also caught attention with a strong move upward, reflecting robust demand in tech and communications. For us, these names highlight the ongoing importance of tech in a diversified portfolio. AI and data centers aren't slowing down anytime soon. On the flip side, not everyone's celebrating. Tesla took a hit, dropping significantly on concerns that might linger in the short term. ASML and GE Aerospace also saw notable declines, reflecting broader pressures in their sectors. As long-term investors, these pullbacks could be moments to reassess. Sometimes a dip in a solid company is just the entry point we've been waiting for. Looking at the most active stocks, Nvidia continues to dominate trading volume, holding steady with a slight uptick. Tesla, despite its drop, remains a hot topic among traders, and Intel saw heavy action with its recent surge. These names are often at the forefront of market sentiment, so for us, they're a pulse check on where investor focus lies right now. Diving into the market movers, we see familiar faces like Nvidia and Amazon, though with mixed results. Netflix caught a nice bump, showing resilience in streaming, while Micron Technology continues to ride the AI wave. Petrobras and BP also moved higher, no doubt fueled by those soaring oil prices. For long-term strategy, these movers remind us to balance growth with stability. Energy and tech are both critical pillars. Shifting gears to earnings, it's a busy week ahead with some big names reporting. Keep an eye on Nike, expected to reveal results that could hint at consumer spending trends. Lamb Weston and Acuity Brands are also on deck, offering insights into food and industrial sectors. Last week, we saw Lululemon post strong numbers, beating expectations, which bodes well for retail resilience. For us long-term investors, earnings season is a goldmine for gauging the health of our holdings. Don't just chase the headlines, dig into the fundamentals. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these reports and make informed decisions. Over the past week, some large caps have really shined. Garmin and Lumentum Holdings posted double-digit gains, showing incredible momentum. AppLovin and Shopify also impressed, riding strong sector tailwinds. These short-term surges are exciting, but as long-term players, we need to ask if these gains are backed by sustainable growth or just market hype. On the other end, we've got some notable weekly losers. Genuine Parts and Rivian took significant hits, down double digits, reflecting sector-specific challenges. Blue Owl Capital and Okta also struggled, hinting at broader pressures in their industries. For us, these declines might signal a chance to buy low, but only after thorough due diligence. Sector-wise, industrials and consumer cyclicals led the pack over the past week with solid gains, suggesting strength in economic recovery plays. Energy also saw a massive jump, no surprise given the oil price surge. These trends are worth noting for portfolio allocation, especially if you're looking to overweight cyclical sectors for the long haul. Meanwhile, healthcare and utilities lagged behind, showing slight declines. Financial services also dipped a bit, reflecting caution among investors. For long-term strategy, underperforming sectors can sometimes offer value plays, but timing and macro conditions are key. Wrapping up with some specific company news, Micron Technology is making waves with record quarterly results, driven by AI memory demand, a trend worth watching for tech-focused investors. Delta Airlines got a nod as a quality pick in the airline space, even as oil costs bite. And Palantir continues to ride AI momentum, sparking debate on whether it's a buy at current levels. These stories remind us that individual company performance can often outshine broader market noise, especially for long-term growth. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate the markets with confidence. Be sure to stay engaged with our daily summaries and dive into our SWOT analyses for deeper insights on your favorite stocks. See you tomorrow for more actionable updates.